Welcome back, hard forkers. It's been a while since we've had a chat with you all, and it's great to welcome back somebody that's been in the space for over a decade now, I believe. It's Mark Lamb, the CEO of CoinFLEX. Welcome back, Mark.
It's great to be here. Thank you so much.
Fantastic. Well, you know, I took a bit of a hiatus to reassess where we're going with our hard forking brand, which has only been around for about half the time you've been in the space, but it seems like forever.
That's a long time. That's a long time in the space. Yeah.
It sure is, man. It sure is. And look, to be honest with you, you know, there were sort of back in December where we were reassessing what we were doing with our brand, and we'll get to what you guys have been doing. Lots of exciting stuff happening at CoinFLEX. But for us, you know, there was that, I wouldn't say apathy. It was, you know, the market seemed to be full of 1,000 new projects every day, a lot of fly-by-night action. But look, my interest couldn't be more sparked. I couldn't be more fascinated by what's going on at the moment. So before we get into the here and now, you and I spoke off camera a bit last time about your background, how long you've been in the space. So I think that's a good way to kick it off. Tell us a bit about yourself.
Yeah, absolutely. So I got involved in Bitcoin in 2012. And back then it was pretty much just Bitcoin. There were some other altcoins, but really they were very, very experimental, and no one was kind of seriously investing money in them. And so got involved in 2012 and basically started buying Bitcoin in the UK and started trying to figure out how could possibly get my hands on some of this stuff in the UK, and realized it was quite difficult. And in so doing, that problem created an opportunity. So I started kind of buying and selling to people and kind of offering services as a kind of broker and OTC market maker. And very quickly realized, like, there's not a lot of people doing this. It's not very competitive. The spreads were very wide, and you could make a lot of money very easily. But it was also just a very limited market size. And so although we felt like, oh yeah, this was a great time to be doing something that's not competitive, and there's a real need for it. The market was also just absolutely tiny. The market cap of Bitcoin was less than $100 million at the time. Price was sub 10. And so I created CoinFLEX, which was the first UK Bitcoin exchange. And it solved a very basic problem people had, which is how to buy Bitcoin in the UK, how to buy and sell. We wanted to create something that was a professional outfit, unlike Mt. Gox, which kind of constantly had issues with from banking to their servers to just all kinds of issues. And obviously, as we know, that kind of collapsed. And so created CoinFLEX, ran that for several years, and realized that derivatives were going to be where the most of the action was. And I like to say that we built a monopoly market share, or a dominant market share, over probably one of the least valuable markets in crypto, the British pound Bitcoin market. It was great to be providing the service, but really all the action was in actual trading. So people would often buy their Bitcoins on CoinFLEX, take them to Binance or BitMEX and OKX, and at a time pre-BitMEX even, OKX and Huobi, and trade them, derivatives and more interesting coins. And so we realized, we're probably actually getting the bad end of the stick here. And so we created CoinFLEX derivatives exchange, and we've since then just built a bunch of products on top of CoinFLEX. We've kind of spun out with my co-founder Sudu, moved to Hong Kong, and just been building things ever since. But yeah, I've been in the space 9 years, so I've seen quite a few interesting things at this point.
Absolutely. We're gonna do a deep dive and explain to people that aren't familiar with CoinFLEX what that's all about in a moment. But I want to pick your brains a bit more about those early days. Who was in the market then, and who do you see coming into the market now? We'll get to some advice for people that maybe are just watching this for the first time, learning about crypto, learning about CoinFLEX. But tell us about those early days. Who was around? What was going on? What sort of people were they? And we'll compare that to what we're currently seeing in the space now.
Yeah, it was really interesting because the participants could not have been more different. So in 2012, it really was primarily very, very extreme tech nerds. And by extreme, I mean interested in uncommon things. So tech nerds that were interested in very, very niche parts of the software industry and the cryptography industry and the open source industry. There was a lot of people that came from the open source industry. And then it was also anarchists and libertarians and people that had been attracted to crypto for what they felt it could bring politically to the world as kind of a non-state global currency. So people who thought, well, this is interesting. You've got a currency that is actually not controlled by any government. This could really be something that is very special and builds a lot of value over time. And I think the tech nerds, generally speaking, didn't manage to get as much of the ecosystem. Like they didn't manage to buy lots of Bitcoins and hold on to them. Some of them did, but generally speaking, that was less the case. And the people that were more looking at it from a political perspective saw that, okay, if this takes off, it, these kind of $10, $5, $8 prices we're seeing now, these are just going to be a total thing of history. And we could go to hundreds of thousands of dollars per Bitcoin or millions of dollars per Bitcoin. And so I think there was this, a lot of people think now that they say, oh, well, how did you know? Or no one must have known. Actually, like the prices much higher than today's crypto prices were like a thing of constant chatter back in those early days. Everyone was kind of thinking, oh yeah, this could one day be worth an absolute fortune. And it was just because we looked at it as a comparison to money. So you look at it as a comparison to M1, M2, different ways of measuring the market cap or the total money supply of US dollars. And you think, well, this could become a superior form of currency. And that was kind of how people thought about it back then. And then right around the turn of 2013, there were a bunch of political events and crypto news events, and just the spark ignited. And in 2012, I would say there were probably several hundred people actually involved in the space. So involved, like more than just they'd bought Bitcoin once, they were kind of working on something, a software project or a company in the space, mostly software projects, not a lot of companies. And then in 2013, it just exploded. And even 2017, even 2020, 2021, from an order of magnitude, from a number of people at the beginning of the year to number of people at the end of the year, obviously dollar price as well, it was unlike anything I've ever seen since then. 2013 was the strangest year to be in crypto, because you went from no one knowing about it at all, knowing about it, not, now we've seen people know about it, to people dipping their toes, to people buying it, but no one knowing about it, to what it felt like everyone knowing about it. And so that was just crazy. 2013 was still, one of the most unbelievable years. 2017 was amazing as well, but yeah, I think that there was this evolution of the space where it went from being a science project to being something that you could speculate on, and something you could bet on, and something you could buy into. And Cyprus was helpful for triggering some of that. Chinese capital controls were helpful for triggering some of that. And just a bunch of use cases. I think there were a bunch of use cases that caught on. So all of a sudden, a bunch of different, I think in 2013, 100,000 merchants started accepting Bitcoin. Probably before then, my guess would have been it was less than maybe 1,000. So it was an enormous increase in the number of places you could actually spend Bitcoin, albeit they were mostly online, but still, there were real legitimate brands coming in to accept it. And then also, there was just this sense that, wow, this, Cyprus is having high, haircuts on deposits. And, there was this concept of the pigs countries, Portugal, Italy, Greece, and Spain. And everyone was worried about what might happen to them if there was a sovereign default and all sorts of things around that. And so Bitcoin was just seen as this safe haven, which was totally a transition later. Nowadays, it's actually treated as a risk asset. And so it's actually trading kind of similar to a high growth tech sector index or something like that. And so we've seen this kind of total divergence. But generally back then there was this sense that, wow, the sky is the limit. And, there was a lot of FOMO in 2013 and then in 2014, I would say both of the extremes, kind of the extremes in 2013 were higher, expectations at the end of 2013 in the peak of that market cycle were probably that in the next 2 or 3 years, crypto was going to become the biggest currency in the world. That wasn't the expectation of the general public, but if you were in the space, building things in the space, you started to get these kinds of delusions of grandeur around what was possible in the next 2 to 3 years. And then in 2014, everyone thought it was dead. Everyone just thought, oh, now Gox is hacked, clearly crypto's dead. So
yeah.
And it was amazing. I mean, it was an amazing time to be in the space.
Yeah. So you've raised some really interesting points there. I think let's do a bit more of a deep dive into a few of them. From my personal point of view, I came into the space a number of years after you in 2016. And of course, for me, it was the classic journey that probably most people watching this have gone through. You've got that friend. They're like, wow, look at all this money I've made. For me back then, it was primarily Bitcoin. In fact, it was Bitcoin, the chats I'm having. But nowadays, it's one of the other 16,000 coins that probably more attractive people into the space. I have to put my hand up and say that, my Bitcoin holdings from a trading perspective, reduced because some of the money you could make on playing around with everything from an NFT to play to earn games, etc. We'll get into stable coins yields there in a moment. The space has exploded. But do you think the importance of Bitcoin has become more relevant with recent political events, especially with things like Ukraine? And in telling us your thoughts on that, can we maybe delve into exactly what Bitcoin is, what its attributes are, what it does offer people?
Yeah, Bitcoin at the end of the day is decentralized money. And the reason why that's hard for people to grasp, or a lot of newcomers into the space sometimes gravitate towards some of these other projects, and maybe they should be gravitating towards some of these other projects. Maybe Bitcoin isn't as relevant for them, but decentralized money, decentralization. There was this saying that came out: decentralization is a means, not an end. What is the end goal? Well, if your end goal is just making money on something that's going to go up really, really fast, then at the end of the day, Bitcoin's market cap is over $1 trillion. Its market cap is big enough that it has a gravity to it. It might not be able to double every year. It might not be able to 10x very quickly in a way that someone who's really speculative might want. But what is Bitcoin? So again, decentralization. Decentralization means no one can control your money. And if you're in America with a bank account and a PayPal account and a Visa card, and you're not doing political speech and you're not doing anything that might risk your funds, maybe you don't care about that. Maybe that's not relevant to you. But if you're in Canada and the truckers have been protesting, and now they're getting bank accounts frozen, and even the people that are donating are getting bank accounts frozen, that might be extremely relevant to you. That ability to have uncensorable money that can't be shut down, can't be easily free, can't be freezed at all. It can be seized if they go to your house and do these types of things. But but really it's unstoppable money, and that is very attractive. If you're in Russia and there are sanctions going on, it's the sort of thing, and we've seen this even with the U.S. government, where they're working with exchanges to enforce sanctions around the specific targets of the sanctions, but they're not saying, don't allow Russians. And they've specifically advised a lot of these exchanges not to allow Russians. And I think in part that's just because, look, at the end of the day, crypto is peer-to-peer. It's unstoppable money. It's something you can hold in your own wallet, have self-custody of, and transact with. The way I traded Bitcoin in 2012 was not on any exchange. It was meeting up with people and doing these types of things peer-to-peer. And so at the end of the day, Bitcoin is something that is very powerful from a political perspective, very powerful from a freedom perspective, and it's a globalizing force. It's an international currency that is politically neutral. It's like a Switzerland, except rather than being built with flags and national borders and police and these types of things, it's a Switzerland that's built with code. And that's the promise that a lot of us in the early days were very interested in. That's something that often gets overlooked, because at the end of the day, on the Ethereum network, I can participate in all these DeFi, ecosystems, and I can do staking, and I can do all these different things, some of which are more like games, which are very fun in many ways, and some of which are more like the first ways it's ever been possible to do decentralized financial infrastructure. And so during times where things are all well in the world and everything is good, you start thinking, oh, I've got security. I want to play more of these games. I want to do more of this speculative stuff. I want to do more of this stuff on top. But for people in Russia, for people in some of these places where the ruble is losing huge amounts of value every day, they need Bitcoin. They need real crypto that's decentralized. And I think Bitcoin Cash is another good example of that as well, which is Bitcoin, but with scalably low fees. And so that's one problem I think that turned a lot of people off of Bitcoin as well, was the fees skyrocketed to hundreds of dollars back in 2017, and there's kind of nothing preventing that from happening again. But really, the essence of this stuff, the essence of decentralized cryptocurrencies, Bitcoin and Bitcoin Cash, Ethereum in many ways as well, is that they can't be censored, they can't be stopped, they can't be shut down. You can control your own money with them, and this is something I think people kind of parrot. People talk about as this meme, and then when stuff happens like this, like war, it actually becomes really, really meaningful, and it actually starts to matter enormously.
Yeah, absolutely. Look, I mean, none of us saw the pandemic coming. I absolutely didn't think this war the horrible war we're seeing at the moment would take place either. That maybe leads me on to another point that I think is also overlooked with regards to Bitcoin and blockchain as a concept. We've spoken about the uncensorable, unconfiscatable nature of this asset. The other thing I really love about this space, and it's been one of my biggest learnings, is that the essence of a blockchain been sort of pseudo anonymous, so to speak. You are able to see money flow. So there's a lot of speculation around what sort of deals potentially were done in Ukraine between the US, etc. Are there elements at play there? Now, we don't have any ability to really delve into these big deals that are made by a very small amount of people on this planet. With a blockchain, all of that is public. It's just recorded. It's there forever. It can be tracked back. A lot of people that were using Bitcoin for nefarious reasons in the past have found that out the hard way lately. Hilariously, our little rapper friend and her hack of Bitfinex is one that I've...
Razzle Khan,
the Versace better win. Come real far, but don't know where I'm headed. motherfucking crocodile of Wall Street. Silver on my fingers and boots on my feet.
I nearly wet my pants. I actually see you guys are sponsoring Doug Polk. He did a great take on that.
Yep.
Great to see Doug back in the crypto space. I think he's absolutely fantastic podcast. Go check that out. And as I say, sponsored by CoinFLEX. So congrats on that. But look, tell us about what I'm alluding to here. The fact that everything is there for everyone to see on a blockchain, and how that might help the planet moving forward if we are able to bring in these political and large economic institutions onto the blockchain.
Yeah, I mean, at the end of the day, it's a, you know, when you think about transparency, it's kind of a question of who benefits. And so I think the public is the biggest beneficiary of transparency. And that's why crypto had to be designed that way, because it wasn't designed, you know, crypto wasn't a B2B product sold to institutions and big business. It wasn't a corporate payment solution, right? So Visa, all their data is private, and they own all their data, and that's just the way they were designed, and they were actually, you know, designed as an attempt at decentralization, but obviously they're still extremely centralized. But Bitcoin and crypto generally was designed where the end customer is the end user. You know, it was designed with this concept in mind of running your own node, running your own, you know, a wallet, having your own wallet, where from your wallet you can literally send funds at the same level of autonomy and mastery and sovereignty as a bank or even a national government, where, you know, a bank can freeze your account, but with a wallet in crypto, you become a bank. You're not just an account holder at some institution. You're a bank because you can send money to whoever you want. You can transact in this kind of frictionless way. And so if a system is designed for those end users, well, it has to be transparent for those end users, because if it isn't fully transparent for those end users, how is it going to get anyone to trust it? And in the early days, you know, I dismissed Bitcoin. In I think 2011, I learned about it, and I said, oh yeah, this is not going to work. There's less than 10 websites in the world that even mention this thing or accept it. You know, no one's ever going to use whoever designed this system's version of money, and it is the natural first reaction of anyone who learns about it is that, at least it was in the early days, and I think still today, you know, for a lot of people, they're thinking, well, you know, who's this Bitcoin company? What are they doing? You know, and that's the thing. There's no company. There's no one doing anything, and it can be that way because it's entirely public, and so anyone can participate on the system at a root user level, at a level of total same privileges as any other user. And so by designing the system that way, they, you know, whoever Satoshi was, empowered the end user in a way that, you know, it's very native to a lot of open source, but even I think for open source, this is going, you know, another several layers deep, and really had never been done in financial services, had never been done in payments, had never been done in banking. Any interaction with money, you don't get this level of sovereignty. The only thing that maybe comes close is cash. And cash is great. You can use it yourself. You can self-custody it. You know, the wallet in your pocket is also self-custody. We talk about self-custody in crypto. You know, the wallet in your pocket, the cash in that wallet are self-custody, but they're also useless. You can't send it around the world. You can't program it. You can't do any of these types of things with it. So I think Bitcoin is kind of combining these concepts in a way that is just absolutely transformative.
Yeah.
And it's funny because, you know, I would have thought back in 2012 that these concepts we talked about back then would be we'd be talking about such higher primitives by now. And in many ways, that was correct. We were kind of looking at smart contracts and what types of things you could build on top of this type of ecosystem back in the day. And now, most of the dialogue and debate and discussion and interest in crypto in the last 12 months or the last 18 months has been about some of these higher primitives. So I think that is a maturation of the space. A lot of what's being built on Ethereum, Spark BCH, all these EVM chains, that is a maturation of the space. But at the end of the day, the still basic principle, the basic, feature of self-custody, of all the benefits of decentralization, public transparency, total publicness of the money and the transactions, all of these transactions are still super core to what people like about cryptocurrency. And they're super relevant today with everything that's going on regarding war. Citizens are the ultimate losers in any war. Citizens from either side of the conflict, and even citizens, the populace of countries that are not part of the war end up being the total losers. And whether that's from inflation or death, losing their life, or all sorts of things. And money is not the savior. Money can't bring the dead back to life. It can't prevent you from getting hit by a missile, but it is empowering in a political way, and it's empowering in a sovereign way, in a way that's just totally useful and totally relevant and totally important in a day and age where war is kind of coming back and a reoccurring theme.
Yeah, correct. I mean, it came as a surprise to a lot of people I was talking to the other day to let them know that the two countries with the highest penetration of crypto are actually Russia and Ukraine. Throw Nigeria into that mix as well with their sort of political uncertainty. I believe it's actually banned there, but they've got an extremely
sobering,
high penetration.
Right?
Yeah,
I mean, it's depressing in a way, and it shows you how this stuff is actually in the West and in many parts of the world. Crypto is sort of a luxury item. But in places where there's this level of instability, crypto becomes a necessity.
Yeah. And
so, I mean, it's unfortunate that that's the case. It's truly unfortunate. But it is great that there's this tool to escape.
As I mentioned earlier, I started hard forking back in 2016, and that year was very much a bit of a one-man journey learning about Bitcoin. There was hardly any media around that I could understand, or as you alluded to before, it was primarily sort of tech geeks and so forth in the space.
Yeah.
Hence doing what I did. I wanted to educate people on the space, and did that exclusively around Bitcoin for a number of years. My progression has obviously then gone into Ethereum. We've actually launched hard forking as an STO. We want to build a legal DAO, a company owned by hundreds, if not thousands, of people. There's so many fascinating things happening in the space, and I've come back with a renewed vigor to educate people on what is happening, what is available. I've been using your product for I think about 8 months now. I've had FlexUSD. I think it's wonderful.
Oh, fantastic.
Yeah, I think it's a fantastic product. So let's maybe delve into, in as simpler terms as we possibly can, because this channel is all about bringing new people into the space, educating them on what is out there. We've spoken about Bitcoin, but let's get into what you find exciting in the space. Obviously, CoinFLEX I find very exciting, hence we're having this chat. So tell us about what you guys are doing. Tell us about where that fits in the overall space. And for somebody that's very new to crypto, why should they know about you? Why should they go check it out? And what do you got available?
Yeah, so CoinFLEX is a futures exchange, and we also have a stable coin called FlexUSD, which you mentioned. And FlexUSD it's a stable coin. For people who don't know what a stable coin is basically a crypto token that's worth $1. Very simple concept. It's worth $1. It's usually redeemable for $1. And you can usually create more units of it, which we call minting, for $1. So very simple concept. And there's different types of stable coins. Tether, USDC are two of the big centralized ones. And then there's some decentralized ones as well. And CoinFLEX has created the first stablecoin to pay interest. So Tether, USDC, they're those businesses. They are businesses. They're for profit. They make most of their money. They make all their money really from earning interest on people's funds. So they take the dollars that they're given to mint USDC. They take those. They deploy those into some type of assets in the traditional financial sector, often government bonds, and they're basically earning interest from those assets. And the assets are worth $1. They're stable assets. And so CoinFLEX has done the same thing. We've taken the assets and we've deployed them into CoinFLEX specific fixed income markets. CoinFLEX is repo market. And that is a market where when you're deploying into it, it's always worth $1. But the thing that's unique about this is it's earning interest. It's earning interest from people that are long futures contracts. And it's paying that interest to the stablecoin holder 3 times a day. So if you hold FlexUSD 3 times a day, your balance just goes up. Your balance just increases. You don't have to be staking it. You don't have to be doing anything with it. If you just hold it on an Ethereum address anywhere on the blockchain or on any other blockchain that's on, we're going to be launching on many blockchains soon. You're just earning interest 3 times a day. And so this is very unique because what we're really doing is we're taking a very popular, very safe form of trade in the crypto space, which is buying spot and selling futures, collecting funding, lending into the futures market, lending into the people that want to be leveraged, and collecting funding from those people, collecting funding from that trade. And we're giving all of the returns, 90% of the returns, to the users of the stablecoin. So it's something that it's been done in traditional finance for many decades, the basis trade, and we've this thing we've created is called the repo market. The repo market is a trillions of dollars a day market in traditional finance as well. And the thing about it is that repo, crypto repo, traditional repo is very similar in nature to a house loan. So if most people think of different types of loans in their lives, they might think of student loans, they might think of credit card debt, they might think of housing mortgages. And housing mortgages are very safe for the bank because if the borrower doesn't pay, the bank can take the collateral and sell the house and recoup the loan. Well, that's similar to what's happening behind the scenes with FlexUSD, because FlexUSD is an instrument of leverage. It's helping traders on the other side be long futures and obtain leverage. And the thing that's really unique here, the thing that's going on is, if the traders on the other side can't pay, if the trade is going against them, they're just liquidated. So there's very little risk. The instruments that are being invested in are very safe instruments. It's over collateralized, and it's actually over collateralized so much that we're working with an auditing firm right now, and we're going to be publishing the actual balance sheet of FlexUSD, because a lot of these ways to earn yield in crypto, they're either decentralized and they have these smart contract risks that a lot of people are very wary of, or they're centralized, but you have no idea what they're actually doing with the funds. And so if you're earning interest in crypto, you have to ask yourself, like, what's going on behind the scenes? How am I able to get such a good deal? How am I able to just deposit my funds here, deposit my stable coins or my Bitcoins, and they just pay me, And so we want to make that process completely transparent, completely public. And so what we've done is we're working with an auditing firm. It's about to go live. CoinFLEX US is about to go live, and this auditing firm product is about to go live as well. And this auditing firm product is really a way for people to see 3 times a day the balance sheet attested to by this auditing firm. So they have full visibility in the back end behind the balances around CoinFLEX. the balances backing FlexUSD, and they're actually able to say, look, this is fully backed. And so that kind of puts people's minds to rest around the stablecoin. It also means that will be the most frequently attested to stablecoin in the crypto space. So attestations and auditing firms are a very important part of every stablecoin. Tether is once a quarter. USDC is once a month. This is going to be 3 times a day. And that gives a level of certainty to the end user that they don't have with other stablecoins. And so what we're trying to do here is create basically the best form of dollars that exists. Dollars in a bank are very slow. They're very cumbersome. The banks are closed on weekends. Often transactions take 3 days to send. Even within countries, in the US, you're sending from one bank to another, and it can still sometimes take 3 days. But internationally, it's a nightmare as well. Yep. And so you have these banking problems, and they're very common. And you have these payment processor problems as well. And you have these problems with cash. There's problems with different forms of money. And in almost all these forms of dollars, you're not getting paid. So even with USDC, which solves a lot of these problems, you're not getting paid any interest. And right now, in this environment where the Fed rates are, kind of the Federal Reserve is the body that sets the interest rates for banks. And so when you go to your bank, you deposit $1,000, they're going to pay you maybe 0.5%, probably much less than that. Well, even if the Fed raises rates several times, FlexUSD on average is kind of paying out 10% plus. And USDC is paying out nothing. So if the Fed does raise rates, it creates this interesting dilemma where Circle's earnings will go up massively, Tether's earnings will go up massively, but the users actually don't get paid anything. So the users will just be basically out of luck. And we wanted to create a solution to that problem effectively. We wanted to create a product where the end users actually get the full benefits while they're trading crypto, while they're using the stablecoin in the real world as a payment mechanism, while they're settling international payments in the stablecoin, they're getting paid interest. And we just thought about all the corporates, a VC fund sitting on $1 billion, where's the interest? They're losing out on all this interest. A big corporate that has to send payments between Nigeria and the US and Europe, to do shipping, they're losing out on all this interest while they're making all these international wire transactions. And they're also losing out on the usability of their funds for 1 day here, 3 days here, waiting for the New York clearing system here. So blockchains solve a lot of these problems. And obviously some of them are not specific to FlexUSD, but FlexUSD, the aim with FlexUSD was to create the perfect form of US dollars. Yep. And I think we've done that.
Yeah, I mean, let's unpack that a bit more. I mean, we're throwing some terms around like repo market, et cetera, that, most people watching probably don't have a clue about. But if we just boil this right down to basics, I can include myself in this scenario. I am sitting in stable coins and I've been looking around for yield. You mentioned the fact that, yes, there's lots of DeFi products out there. Some of these are, they're anonymous type situations. There's been some wild swings in interest rates and returns on these recently. I've been burnt by one in particular that came highly recommended. You know who you are that recommended that one to me. But anyway, coming back to what you guys are doing, I really like this product, but people watching will go through that same thought process as myself. How safe is this? What's it really backed by? You've talked about, obviously it's collateralized by that repo market, people trading effectively. Is there a relationship with USDC? Can you tell us about that? Can you tell us about the things that people might be worried about? How safe is this? They've learned about crypto, they bought some Bitcoin, they've maybe jumped out of the market recently thinking, so there is a ton of money sitting in Tether and USDC at the moment. And for most people, not actually earning any interest on it. So talk us through that process for someone that's got to that point in their crypto knowledge, but might not really sort of trust what to do with it next. Tell us how safe it is with you guys. What are the talk us through that.
Yeah. I mean, there's literally $100 billion sitting in USDC and Tether at the moment. So that's a lot of money earning 0% interest, right? And so yeah, the safety really comes from the fact that this is pegged to USDC, so you can redeem at any time with no fees, no spread, 1-to-1 for USDC. It is over collateralized with CoinFLEX's
now,
margining
just
system.
quickly for people watching this, USDC is it's a
USDC
company
is another
in the
stablecoin.
US. It's regulated. It's backed. There's a lot of eyes on it. I'm weary of USDT. It's got a patchy record, in my opinion. So that's one of the reasons I went with CoinFLEX. Its relationship with USDC. Just want to point that out.
Yeah, so the way to create more units of FlexUSD is with USDC, and that was an important part for us as well, because we knew that there were going to be a lot of people that would not trust something that was mintable with Tether, and even though Tether was the bigger stablecoin, those issues in Tether's past, just generally speaking, meant that USDC was the right choice. And also, just from a friction perspective, if you are a business in the US or even a retail user in the US, you can create and redeem USDC with no fees. And we can do that as well as a business as well. And so that was really important to us as well, as there's no friction on the way in and out. People trust it. It's regulated. It's got strong banking networks in the US. And now we're working on that as well. So we've got CoinFLEX US launching in a few weeks. It's going to be regulated with strong banking. You'll be able to redeem and create FlexUSD 1-to-1 with no fees via a bank. And so these are just important things when you think about a stablecoin. Is first, before I look into what's the underlying, can I get in and out? If I get uncomfortable, or if I need to buy a house, if I need to buy a car, if I need to buy a bunch of Ethereum because it's the market is in a big discount and I want to buy as much of crypto as I can. In all these situations, what's the liquidity? Can I get out? Is there friction on the way out? And so that was an important part of our decision to use USDC rather than Tether, but it was also an important part of why we're launching CoinFLEX in the US, because we wanted to give people the maximum options for getting out. Get out into USDC, sure, go to coinflex.com. You can do that today. Get out into US dollars in a bank, you'll be able to do that in coinflex.us in a few weeks. So that was something really important. But the backing is also extremely important, because that's the ultimate cause for the stability of the coin. And the backing is really from basically one of the most common trades known to high frequency traders, hedge funds, large institutional money managers, which is called the basis trade. And the basis trade is really when you buy an asset and then you sell an equivalent amount of futures contracts against that asset. And this is a collateralized trade, because your value before you did this trade, let's say it was $1,000. Then you bought 1,000 units of an asset. So you bought $1,000 worth of Ethereum or Bitcoin or something like that. And then you sold the same amount of futures contracts against that. So you're now short the futures and you own the physical coin itself. Well, if you think about this position, let's say we did the trade for 1 Bitcoin. So 1 Bitcoin might be worth $40,000. I bought 1 Bitcoin, I've sold 1 future at the same price. Well, if Bitcoin doubles, I'm now down $40,000 on my futures contract, but but the Bitcoin has gone up $40,000. If Bitcoin halves, I'm down on my spot Bitcoin that I've held. My Bitcoin is worth only $20,000 now, but my futures contract has my short has hedged me. It's protected my losses. And what this means is that at any price, you're hedged. At any price, the dollar value, let's say you put in $1,000 or $50,000, $100,000, it's the same dollar value. And the only thing that can question that is if CoinFLEX as a clearing system and a margining system has problems. So if CoinFLEX on the other side of the trade, there's a sharp movement down and CoinFLEX didn't collect and demand enough margin from the other side. Well, that's where the margin comes in. That's where the over collateralization comes in. That's where on the side of the other side of the traders, on the traders who are long these futures contracts, we're collecting excess collateral such that in any market situation, we have enough excess collateral to liquidate them. Even with a haircut, we'll have extra money that goes into our insurance fund from that liquidation. And that insurance fund today is worth about $40 million. It's increasing every day, in part from liquidations. And it's the sort of thing that ultimately the margin is the biggest protector. And people think, well, you're demanding margin, that's great, but crypto is super volatile. That is totally true, except that we're not looking at crypto from a one day to the next day volatility perspective. That's what traditional finance does. That's, traditional finance is, oh my gosh, you're under margined, sorry, sir, we're going to call you up and request additional collateral. And by the time the guys answered the phone call 3 hours later, the bank has taken a loss on that guy's funds. We're doing things totally differently. We're liquidating in real time. We're saying, oh, you're coming close. We can see that, this ratio is coming close. We're going to partially liquidate you now. You're coming closer. We're going to do another partial liquidation. Okay, now we're going to fully clear you out of your position. Take the rest of the margin, put it in the insurance fund. And that system of risk management relies on the fundamental property of crypto, which is that it's a 24/7, 365 market. Yep. This is a market that doesn't close, doesn't sleep, it doesn't have gaps. It's open and on all the time. Yep. And so what we're really looking at is 1 second volatility, because we run these risk checks every single second. So we're looking at the 1 second volatility of the different crypto assets. And that volatility is very low. And so that's why leverage can exist. And that's why we can be vastly over collateralized and feel very safe in that over collateralization, because we've got a lot of time, multiple seconds to liquidate a user, or multiple minutes even. And we can have this risk engine that responds to the speed of the market. It responds to market conditions, and it responds to, the collateralization factors and ratios of all the different customers. And so, when we say that FlexUSD is over collateralized, what that means is that actually, if FlexUSD has $1, it's backed by more than $1. It's backed by more than $1 worth of collateral on the other side. And the powerful thing about that is if USDC has $1, if Tether has $1, a lot of these stablecoins that use the traditional financial system, they're actually going out and buying fixed income instruments. They're buying 6 month, 9 months, 12-month maturities. Well, if they have a large redemption, they have maturities that are not matched to their redemptions. They're the contracts they're buying, the instruments they're buying, the securities they're buying, might expire in 9 months. If they were to sell them today, they would face a significant discount today. So, these stablecoins are not necessarily over collateralized. The value of bonds and fixed income securities goes up and down with things like inflation, war, all of these types of things. The value of these owning spot short futures contracts, the value of repo in CoinFLEX doesn't go down. It doesn't go up. It doesn't go down. It's the same. Right now it's $1. In an hour, Bitcoin goes 10% up, 10% down. It's still $1. So that's why it's a very different level of risk than a lot of these other stablecoins. And I would say it's a lower level of risk, but also one that matches the maturity. FlexUSD is redeemable. You can redeem half of the supply tomorrow if you wanted to. And the only way we're able to do that is by, putting those funds into something that is similarly redeemable.
Do you have to, so you've raised some really interesting points there. We're talking about risk on, risk off assets, etc. For me with your product, that's what was super appealing to me. It really felt quite risk off compared to everything else I was looking at. But you raised some interesting points there. Even a stable coin, that is a backed product, it's regulated, USDC out of the US. But yeah, you've raised really interesting points there that could still have issues the way that operates, just like the traditional financial sector. could, hypothetically, if there was a big problem there, you're talking about you're still over collateralized with your product, but can you exit to other cryptos with FlexUSD, or it has to be back out through USDC? God forbid there ever was a problem with that.
Yeah, so the exciting thing about CoinFLEX US is there's going to be spot markets for FlexUSD into every coin that we list on CoinFLEX.com.
Right.
So spot markets for Bitcoin, Ethereum, all these things into FlexUSD. And so we're really excited about this because it's the chance to actually create a market of FlexUSD pairs where you don't have to exit from FlexUSD into USDC into Ethereum. You can just go straight. And so on CoinFLEX.com, you can use FlexUSD as collateral to trade futures, but there are not a lot of spot markets for FlexUSD into some spot asset. But on CoinFLEX US, we will have spot markets for FlexUSD into all these assets. And that's something we're really excited about. We want a scenario. There's already about 9 DEXs, 9 decentralized exchanges, some on Ethereum, some on Smart BCH, that have FlexUSD pairs. We're looking forward to Avalanche, Phantom, Matic, BSC, these ecosystems having DEXs that list FlexUSD pairs as well. The dream that we want to have is a market where, you're not exiting crypto into a zero interest stablecoin. You're exiting crypto into a FlexUSD. And then when you buy back in, you're buying with FlexUSD. And that whole time you've been out of the market, whether it's a day, a few hours, a week, you're earning interest.
Yep.
That's what people want. You should be winning whether you're winning from your crypto trade or whether you're winning from being out of the market.
Yep.
And just earning interest on your cash.
Okay,
that's
let's get into the regulation side of things. A lot of our libertarian friends probably rolling their eyes. The Bitcoin maximalists, and I hope the audience sort of understands these various use cases that exist in the wider crypto space. Bitcoin, unconfiscatable, uncensorable, pseudo-anonymous, everything there to be seen on a blockchain, etc.
Yep.
And then we move, you've been through that entire journey. Now we're at a stage where you've launched this company in the US. It's regulated. That'll surprise, a lot of people. I've expound the virtues of Bitcoin, and been sort of, anti-regulation for a number of years. But look, you guys are effectively becoming the new, better 2.0 version of banking. Talk us through that journey, because I know last time we spoke, you were based out of Hong Kong. We touched on regulation in that conversation. What's that process been? How did this all take place, and what does that mean to maybe the more sort of conservative people watching this that are looking for a yield on a stable coin, which you would maybe say is sort of the safer way to approach crypto at the moment?
Yeah, I mean, I think at the end of the day, Bitcoin actually is self-regulated. So the powerful thing about Bitcoin and crypto is that it's actually regulated by the network.
Yeah.
And so as a consumer, what you don't want is a Wild West where there's, it's just cowboys and crazies and you have to be constantly vigilant about getting scammed. The thing about investing in, let's say it's BCH, Bitcoin, Ethereum, whatever, you're investing in a network that is actually regulating itself. And that might be much safer than a lot of other forms of regulation, in fact, because regulation by code and self-enforcing network rules and logic might even be more powerful than humans. But if you're operating a company like CoinFLEX is a business, there's a CEO. I'm the CEO. There's a whole team. There's a bunch of people involved. Anytime you're operating a business, you do want a degree of regulation, because that's ultimately what consumers expect. And so we're not getting regulated for the sake of feeling good about ourselves or because we think it's we're getting regulated because consumers expect that, businesses want it. It's the law in many places in the US. Certainly we can't legally operate without being regulated. There are regulations we have to follow. And that's what's exciting about this next phase in our journey, is by going through these hurdles and by getting this regulation in place, we're basically able to offer services to a much bigger group of people. There's 300 million Americans. The amount of capital in that country is enormous. FlexUSD, in order for it to be a successful stablecoin, needs to be in the US. It has to be accessible in that market. And so, this is just the next phase in our evolution as a business. And for us to do that, we have to be regulated. And so we're really excited about that. We're also looking at other frameworks around the world. There's a lot of countries that are sort of starting to regulate crypto businesses, but it is one of these situations where regulation is kind of a problem if it's done in a thoughtless way, in a careless way. And some countries are have this kind of odd approach of, we're not going to regulate you, but we're also not going to not regulate you. And you kind of wonder what they actually mean by that, and whether they know what they mean by that. But in the US, there is a body of regulation that just exists, and we can rely on it. And it's, the MSB regulations, the trust law regulations, the banking, BSA regulations. And so we can rely on these things. We can follow these rules, and we can have confidence knowing that we can deal with the American public in a regulated fashion. And it's good for us, and it's good for the customer. So that type of regulation is something we're very much for. And there's some countries and some regimes that do things in a weirder way, and we try to stay clear of those or avoid them. But in the US, it's a very easy market to follow the rules and have a situation where everyone wins.
Yeah, I agree. For me personally, I will continue to talk about, the completely decentralized products out there. As I say, there's a raft of things available, but for certain products, I personally want that regulatory clarity. I want to know that's there from, for my own security. Now, CoinFLEX, are you two different entities now with this US launch? You are. Talk us through that.
Yeah, so some businesses have taken the approach of, we're going to be two different entities, and we're also going to have separate, separate share structures even, and they might have different investors over time, and they might kind of evolve very separately over time. CoinFLEX US is a different entity. Legally, it has to be, but it is a fully owned subsidiary. So there will be a lot of coordination between the two businesses, a lot of close working together between the two businesses. And obviously, the product that CoinFLEX US is promoting, FlexUSD, is a CoinFLEX.com product, right? So there's kind of two main products on the CoinFLEX US business. One is spot trading, and then the other one, the main one, is FlexUSD, and that's what we expect most of the US business to be focused on, is getting more people using FlexUSD. So they will be very, very closely working together. They are obviously two different entities. They are wholly owned by the same parent company, so it's the same CoinFLEX behind it all. And there's a backing there. There's a level of trust. There's a level of security that people have when they come and they're seeing, am I dealing with a totally new business? No, you're dealing with the brand CoinFLEX, and you're dealing with the same capital standing by it. That's standing by the international exchange. So, and we've built up over several years. So that's I think something that is going to be very comforting and useful to people. It is two different separate businesses, but it's the same back.
Okay. Now so CoinFLEX US is just going to be available for US citizens. Is that the case?
Yeah, correct.
Okay.
Well, actually, sorry, no, that's not correct. It'll be available for anyone in the world that wants to open an account. There's few countries that it won't be serving customers from, but generally speaking, it's available to most of the world. It's a banking fiat exchange, so it's an exchange that kind of can offer fiat. And it's not going to be multi-currency, so sorry, but we won't be offering Australian dollars. But it will have. Oh, Shit, we gotta re-record that bit. I'm so
That's
sorry.
fine.
I knew you were a
don't.
Kiwi. I'm so sorry.
No
Okay,
problem.
I'm just gonna.
No,
I'm
that's
so
fine,
sorry.
mate. No, we won't edit that. Look, so in a nutshell, I think what we want people to understand here is that, what we're talking about is for me personally, one of the safer ways to get yield from my crypto.
Totally.
We're all starting to learn about inflation. Many of us in the crypto space have sort of really understood this for a long time. I never, ever in my wildest dreams thought, when I entered the crypto space, that so quickly we would find ourselves in the situation we're in now. So a lot of people are watching this going, well, okay, how much money can I make? What is the yield? So talk us through the fact that obviously it's not a fixed interest rate on this product, and why it can move around quite a bit.
Yeah, so that's probably one of the things that we're most excited about on the product, but it is a bit new for people. So the interest rate is not fixed, it's floating. It's a free market-based interest rate. So when more FlexUSD is created, the supply is expanding. And that expansion of supply lowers rates, right? If FlexUSD right now, let's say it's $400 million at present. If someone creates or mints into existence $1 billion of FlexUSD, the rates are going to go very low. But what that does is it actually creates a huge incentive for people to be long futures contracts on CoinFLEX.com. Because they'll have very low financing rates on those futures positions. And it also creates an incentive to borrow using CoinFLEX's repo market. So to get cash and to be long futures contracts against that cash, you still have the value that the crypto you're exposed to. And both of those things, being long futures contracts and also like using repo as a mechanism to borrow, both of those things create more demand. So the demand increases rates, the supply decreases rates, and the two work in parallel to drive FlexUSD. So as there's more demand, a lot of people will say, oh, FlexUSD is now paying 15%. I should probably mint some FlexUSD. And as there's more supply, a lot of people will say, oh, wow, rates are down to 5, temporarily. I should maybe get some exposure to futures, or I should maybe borrow against my crypto here because this is a very favorable rate. And as the futures exchange on CoinFLEX grows, as the futures business grows, as more people are trading futures, generally speaking, that market becomes more efficient. And also, generally speaking, there's more demand for leverage. There's more demand for paying interest. And so the two businesses, as it were, the two products, the futures product and the FlexUSD product, are very symbiotic. They work in parallel. And as the FlexUSD market cap grows, the futures positions grow almost 1-to-1. It's almost a 1-to-1 parallel growth. So that's why we know that if we get more people using FlexUSD, if FlexUSD becomes a large stablecoin, we can become the largest futures exchange because more people will say, oh, this is the best place to be long futures contracts.
Yeah. So for some of the audience, they're probably still trying to wrap their heads around what futures are, etc. So if we take it back a step, a lot of people out there might have got lucky and sold a JPEG for a lot more than they bought it for, and gone into a stable coin that's sitting in their MetaMask or maybe on another exchange. Can you, in really basic terms, explain to those people how they would onboard with you, and how they can also keep that in their own MetaMask and their own wallet? So give us the basics on the functionality and what that person with a stable coin needs to do.
Yeah, absolutely. I mean, it's very simple, really. They would just need to get an account on CoinFLEX.com, deposit USDC, and then just basically mint FlexUSD. And you just go to the top of the screen. There's a button that says FlexUSD. Click that button. Click mint. It's extremely easy. There's no fees involved, and it's instant. So that's, and then from there, you can withdraw it to your MetaMask. You can do whatever you want with it. You can trade it. You can transact with it. You can send it around to other people. And the whole time, while it's on your MetaMask, while you're doing things with it, you're earning interest. And that's the powerful thing. That's the ecosystem we want to create. Really, is this ecosystem where people are saying, oh, you know, while I'm earning interest, I also want to be using my money, and you know, there should be no compromises when you're using a dollar instrument. You know, you're using a dollar instrument right now. You know, there should be no compromises. It should be instant to move around. It should be very low fee to move around. You should be able to have full access to smart contract capabilities to move around. And above all, you should get paid. You should get paid interest while you're using it. So.
Absolutely. So a lot of people, crypto's on their radar now. You know, we've had the recent Super Bowl, which was just dominated by crypto companies and ads. You know, crypto really is going mainstream. You know, it's great to have a product that's also regulated now, especially for, you know, something that is an interest-bearing stable coin. You know, I want to reiterate to my audience, I love products like this. I see where this market's going, but at the same time, you know, I'm still a big fan of things that are as decentralized as possible. There's some amazing things still happening in the space. But Mark, how do you see things playing out? I mean, crypto's become geopolitical now. Things are moving fast. It's really hard to keep up. What do you think the next couple of years have in store? And can you also maybe touch on the advent of security tokens and what they are, and your views on that?
I think they're at the heart of it. There's an economic efficiency, and there's an increased sort of freedom and ability to do things with your money at the heart of crypto. So at the heart of crypto, that's what people are interested in. More utility of their money and more freedom of their money. And those two spheres are sucking all economic activity in. Yep. So if you think about Coca-Cola, Nestle, McDonald's, do these companies benefit from more freedom with their money and more economic activity? Yes, they do. Would they be better off using stable coins for their treasury management? Would they be better off using crypto in some use cases? Yes, they would. And that is going to suck every major corporate, every major institution, every major bank, every major government into this space simply because of the profit motive. So I think the highest conviction belief I have about crypto in the next few years is that stablecoins will, without a doubt, grow massively, probably several orders of magnitude in the next 10 years, probably from where we're at now to trillions of dollars. We're right now kind of 100 billion. There will be trillions of dollars of stablecoins in the next few years. And that's simply a transformation that's going to happen, even if crypto goes down 50%. Even if we have a depressing bear market where it seems once again like no one cares about crypto, stable coins will probably be several $trillion in the next few years. That's for no other reason other than they're more efficient, and you have more freedom. You have programmability. You have more freedom with the cash, and that fact, that inevitability, will drive huge amounts of innovation in the space. Because once a large corporate, once a large institution or brokerage firm or bank is using stablecoins, they're opened up to using all sorts of other crypto native products. They're probably more, they've probably gotten around self-custody. They've probably figured out how to custody ERC20 tokens, which means they can custody Ethereum, which means they can custody Bitcoin and other things. And once you onboard a bunch of people in terms of being able to use crypto, some of them might decide, oh, actually, I don't want the stable coin. I want the actual crypto asset because it's not tied to dollars. Some of them will want something that's tied to dollars. And so, but all of them will jump in. The touch point for huge piles of capital will be stablecoins.
Agree.
The touch point for other piles of capital will be things like NFTs. So NFTs have gotten people without a lot of money, or people without a lot of financial background, or people that care about art, people that care about games, people care about other things. They're jumping into crypto now, and it's the same dynamic. They now know how to use MetaMask. They now know how to use their own wallets. They now know how to use crypto.
Yep.
And so, and I think it's going to be similar for securities tokens. At the end of the day, securities are settled in a very slow manner. They're settled sometimes T+2, T+3, sometimes end of the day. It's not real time. So the question there is what regulators make the jump of, we're actually okay with these things being transacted on blockchains. And we're actually okay with these things being transacted on DEXs as well. And we're actually okay with these things being transacted on public chains, not just private blockchains. And so that's what's happening.
Yep.
That's what's going to happen in a bunch of different parts of the space. The one I have the most conviction on is stablecoins, but you'll see NFTs, you'll see securities tokens, you'll see a bunch of these other parts of the space suck in user bases and capital and institutions and end users in a way that teaches the whole world how to use crypto wallets, private keys, and this whole infrastructure that's been built.
Yep.
And once they know how to use that, they're never going back.
I couldn't agree more. Look, we're both seeing it in the background. It's one of the companies I have a very small shareholding in. I'm just the trajectory of what I'm seeing from them at the moment. They're in the security token space. Where they're building infrastructure, where absolutely everything that we're doing in traditional markets is going to be tokenized. That token. And what people don't kind of understand here is that token is still just a representation of maybe of your share certificate, etc. So, the efficiencies that are being created are massive, but, a lot of people are saying, well, what about all the security risks around that type of thing? But they're sort of missing the point a wee bit that security token as such is just a representation of still a legal document that's there in the background. And I think I agree absolutely with everything you're saying here. The efficiencies of stable coins, it's that oil. Things are just going to take off from here. It's a super exciting time in this space. On that note, what do you see as some of the things that haven't been so great in crypto? What would you like to sort of see improved over the next year or two?
Well, it's a good one, because things have gone, in many ways, things have gone better than I'd ever dreamed. But
Agreed.
I would love to see wallets become even more user-friendly. I think they're already very user-friendly, but there's still a lot of people who get hacked, lose their funds, this or that happens. And it's good for people to learn about security. But ideally, we want a world, if we want to scale this to billions of users, we need a world where there's really almost no risk of that. So I'd love for wallets to improve on that element, on both the kind of the triangle of security and good user interface. I'd also love to see payments take off. Bitcoin Cash has been very focused on payments. There's a bunch of merchants that accept Bitcoin Cash around the world. I'd love to see that use case kind of grow another 100x from kind of where it's at right now. And then I think at the end of the day, it's just about creating more incentives for people to jump in. What use cases can we provide to people such that the average consumer stops using dollars for their transactions, dollars for their salaries, bank funds for their salaries, and they start using stable coins, or they start using cryptocurrencies. That's the real tipping point. That's the real point where people sort of, the scenario you want is someone at 18, they're almost like, do I really need to get a bank account? Because they've been using MetaMask for 6, 7, 10 years. And and you know, they've been able to do everything they need to do with it. You know,
Yeah.
they've been able to live out a life of gaming and finance and transactions and trading. And why not? You know, even if it's something that's a totally not real world object, you know, why not give people in their teenage years the ability to transact with each other in a way where, you know, they can get a sense of what the real economy is going to be like. And so I think that's the powerful thing about crypto. It just opens up, you know, boundaries and borders and restrictions and limitations. And I think that's what we're going to see. How it plays out, I don't know. What do we need to see more of? I think the wallet side needs to grow. I think the payments side needs to grow, and I think the gaming side needs to grow as well. You know, I think we've seen a lot of positive inroads with that, with kind of Axie Infinity and stuff like that. But I think the gaming side probably needs to vastly improve just to catch up to traditional gaming. But I know we don't have a lot of time left, but I also wanted to ask you just a question on how it's been with the STO world. You know, how that process has gone.
Look, we're what I would describe as a legal DAO. So in the coming weeks, we're going to announce that on our website. You know, you mentioned the gaming there. We've got a very big gaming community at hard forking. We were very early to Axie Infinity. We had hundreds of scholarships. We're expanding that out. So as far as, you know, our STO goes, we're a Panamanian company. You know, I'm dealing with another company I have a small shareholding in is launching their STO out of the US. It's quite a different situation there. But ultimately, what we're doing with hard forking is creating ownership in a business. So if you're a contributor to what we're doing here with content, it'll be very clearly laid out for you that your contribution is rewarded. You know, we're paying people in stable coins for their efforts, but we're also effectively paying them with a hard forking token, which is a security. It's an ownership of our business. So you know, powerful. The vision here is to have a very large global media company. So our gamers that are a part of our community, who are making videos on the latest game, reviewing it, posting that across our media channels. We're putting a structure in place where they can clearly see is the reward, you know, in equity, in ownership of hard forking. So, you know, what blockchain has given us that ability to issue shares in reward for people's efforts, but at a fraction of the cost that would entail doing it in the traditional
legal
world.
cost,
the legal costs, the accountant, the paperwork. It just makes the ability to grow a company in this fashion so much easier. And we're going to be very loud and vocal. We want people to see these new business models. Hard forking, as I say, we started out to educate people on Bitcoin. We'll continue to do that. You mentioned Bitcoin Cash there. We've covered all the forks of Bitcoin. We like to give a measured, fair approach to everything. We try to be obviously factual, but also our opinions on various things. So for me, this point in crypto's evolution, the fact that we can launch an STO and do this with our business now, I mean, that's just mind-boggling.
That is
contemplated
it
really even a couple of years ago. So, where are we going to be, 2 years? I'm not just talking about hard forking this entire space. I agree with you. I think everything is getting consumed. I'm seeing it from my friends that run compliance at large global banks. I'm seeing it right across the board from my friends in fintech. Look, everything is moving to the blockchain. It's going to create a more fair, equitable world where we really can see what's going on. It's not a couple of people sitting in a central bank deciding our fates, at their whim. This is an exciting time. And for those of you watching this, please take the time to understand what's going on. It's yes, there's still some Wild West action going on. I agree with your comments, around wallets, but the pace that we're all moving here is phenomenal. There is literally something for everybody in the crypto space. So go check out what's happening. Agree. And Mark, you've been around. We started off by talking about how long you've been in the space. You're a very impressive guy. I love what you're doing at CoinFLEX. I'd like to, we're going to do a monthly show where we're going to be getting thought leaders from across the different sectors of the blockchain space. And I'd love to invite you to come back in a month's time and join that first panel. We've got some heavyweights getting lined up for that. Our history has been trying to bring our audience the real thought leaders, and maybe in the past some of the conversation went over people's heads, but I think there's a good sort of base of knowledge there now. We want to take our community on a journey and constantly keep them at the cutting edge. I think what you guys are doing is very much in line with that philosophy. So, it's been fantastic talking to you today, Mark. I use your product. I'd encourage people to go check it out. Go to hardforking.com. There's a review there. There's a guide. We cover all the exchanges on there. CoinFLEX being one of them. So yeah, give us your thoughts, give us your feedback, and Mark, from you, any sort of closing thoughts or comments? And I hope you accept the invitation to come back and join us in a month's time.
I absolutely do, and thank you so much for having me. This has been an absolute pleasure.
Yeah, cheers, Mark. Listen, thanks for watching, everyone. We'll be coming thick and fast with lots of new content over the coming weeks. As I say, you want to learn more about CoinFLEX, go to hardforking.com. There's a full review there, a guide how to use it, and links to their media and website. Cheers, Mark. It's been great talking with you. Thanks, mate.
Bye-bye.